What is up, ladder climbers? Antoine Wade here from Elevate to the Unknown, the We're reporting nextgenhikes.com. And it is Monday, June the 8th, 2026, 7:31 a.m. Central, and we are live on the Daily Climb. On Friday, the government dropped the May jobs report. We announced it on the show. Good jobs report number came in hot. Way hotter than anybody guessed. They thought we added 80,000 jobs. We ended up adding 172,000. More than double. Good news, right? Yeah, jobs. So the stock market went up to celebrate. You would think that would be the case, right? Nope. It did the exact opposite. The Nasdaq dropped 4.18%, the worst day since April of last year, and $1.8 trillion vanished. Let me paint the picture for you guys real quick. Just imagine you're flying down the highway in a brand new sports car, a new Lamborghini. Maybe you're like Anton Daniels with his new Lamborghini, right? Engines purring. You're making great time. Then you look down. The temperature gauge is climbing and you panic. So you slam on the brakes and put a perfect car in a ditch. That is exactly what Wall Street did Friday. The economy was running hot and they crashed a good market on purpose. God dang, can you believe that? Can you believe that? That's what it did. They crashed a good economy on purpose. I want you guys to hear that twice. Good jobs number, market falls apart. That is not a glitch. That is a signal in the data. Now, there's three things that you need to know today. Number one, why good news scared Wall Street. We're going to be talking about that. Two, what the market just repriced and what it means for your skills. And number three, the one lane that the machine still cannot touch. And also one lesson underneath all of it. When the market gets nervous, it stops paying for hype. It starts paying for proof. That is the whole game right now. I want you guys to type signal in the chat if you felt the market drop on Friday. If you saw the market drop on Friday. If you felt it in your gut, type signal in the chat. Guys, this is the Daily Climb. I'm Antoine Wade. Just getting to the data. But before we get into the data, you know what I gotta do, man. I gotta say what's up to my peoples in the chats. I missed you guys over the weekend. I talked to some of you in the Saturday morning call, but I miss you. I set up the call this morning. It's a little bit later, running a little bit late today. About 6:40 this morning, I set the call up, the show. Brother Cam was the first one in the room. Then Dirty Giants came into the room, Brother Derek. It's like, what's up, man? What can I help you with? I was like, I appreciate you, man. Then Kachana came into the house. Then Women Retire Wealthy. Hopefully your weekend event went well, Jamie. You're going to have to give us an update on that. And then Seamus came into the house. And then Crypto Cakes Cartel. Then Benjamin came into the house. Then Jilly Mella came into the house as well, too. Good to see you guys. Who else is in the house? I said Kachana already. Seamus, Crypto Cakes Cartel. I already said that. Big Suggs in the house. Joe Spivey's in the house. Good to see you all. Who else? Andre Oliver is in the house. Good to see you, Andre Oliver. We have Recap Auntie in the house. The new one's in the house. Law Baby 97. Good to see you. Gifty. Our brother Jeffrey's in the house. Good to see you guys. Who else do we have in the house? We have Fetch Biggest. I think that may be the first time ever seen you in the chat. I'm glad that you showed up. Guys, make sure you take care of Fetch Biggest, okay? Make sure you take care of him. Jason, good to see you. Claude Mason's in the house. Guys, good to see you. We're going to have a good show this morning. Before we dive into it, though, real quick, if you are new here, this show is business intelligence translated into career strategy. Every single weekday, we go live in between 7:25 and 7:30 a.m. Central. The first thing you do when you come into this room, hit the like button. And if you are new here and haven't hit the subscribe button yet, go ahead and hit the subscribe button so that you get access to the Daily Climb. It is absolutely free to give a subscribe, and it tells the algorithm to put this in front of more ladder climbers. This is how we continue to grow the room, and you can help with doing that. And it's free, okay? Guys, let's go ahead and get into the data. Okay. Let's start with the big one, the May jobs report. We talked about this on Friday. I let Rick Santinelli come onto the screen, CNBC. He even interrupted the show a couple times on Friday. The country added 172,000 jobs. They only expected 80,000. And they went back and fixed March and April too. 93,000 more jobs than they first said. Unemployment held steady at 4.3%. You know, typically when we see these revisions, it's going the opposite direction. But no, these are going up. On paper, that looks strong. So let me show you the part nobody is putting on the poster. Here's a number that matters if you lose your job right now. It is taking a long time to get back into the workforce if you lose your job. The people who have been out of work for 6 months or more, they are now 27.5% of everybody unemployed. A year ago, that was 20.4%. So the line to get back in is getting longer, which means basically this. Simple terms. If you lose your job today, it is going to take you a lot longer to get back into the workforce. And wages went up 3% over the year, but prices are eating most of that. So your paycheck feels flat even when the headline looks good. So here's the read. This is a market that is strong if you are already in it. If you are already in this market, it's pretty darn strong. And brutal if you are on the outside trying to get in. Those are two different worlds. Same report. I want you guys to picture musical chairs. I used that analogy on Friday and I liked it, right? Because I was listening to the podcast, to the show on Friday. Because, I like to listen to myself every once in a while. I'm starting to get comfortable with hearing my own voice and listen to myself. I had myself on the screen on the TV and me and my son were just chilling. And I used the analogy of musical chairs. And my son knows musical chairs, so I like to use that example. But picture musical chairs, but the music stopped. Everybody with the seat is gripping it, too scared to move. And if you're walking the circle looking for a chair, guess what? Nobody is standing up to give you one. That is why almost nobody is quitting right now. That's just the reason. Nobody's quitting right now. And here's how the companies are doing it. They froze the front door, but they did not open the trap door. When somebody quits, they just do not replace them. That's what happens. People leave, I'm going to another company. Typically, most companies will say this, you know what? Yeah, let's go ahead and open up a backfill for Demetrius. Let's go ahead and open the backfill for Rick, for David. That's not what they're doing. They're basically saying, you know what? Nah, we can do without. Let's see how long we can hang on and do without Rick, David. That's what they're saying. Now, here's the twist that makes today's show. Wall Street saw that strong number, the strong jobs number, and it got scared. Here's why. The Federal Reserve sets interest rates. When jobs are weak, they cut rates to help. When jobs are strong, they do not. So a hot jobs number means no rate is coming anytime soon. Goldman Sachs even pushed their next cuts all the way out to 2027, and traders started betting the Fed might raise rates instead. Crazy, huh? Insane, huh? Now you're starting to see how this market is reacting on this news. So what do you do with this? You do not panic. If you have a job, you make yourself the obvious one to keep your job. If you are looking, you move fast, because the longer that you wait, the harder the door gets. And I'm going to show you exactly how. Okay. I want you guys to type frozen in the chat if you feel like there's two speeds in this market right now. Type frozen in the chat. I want to play a video really for you guys real quick. Let's go to our Bloomberg. Give me 1 second. Let me see if I can pull this video over.
And they don't really know what to do with it. So the utility of posting jobs is declining tremendously. And I think a large part of the decline in postings is due to that. And, you know, the search and match process is completely broken. So people are staying in jobs. They're just not looking for jobs, which is troubling for a few reasons. Another reason why that's troubling is about the unemployment rate. You know, the unemployment rate is kind of stabilizing, but remember, there's good kinds of unemployment and bad kinds of unemployment. So frictional unemployment is the positive unemployment. That's the job search and match, people just kind of being between jobs, looking for stuff, getting better matches. And that's declining. So I think the natural rate of unemployment is declining as well.
What do you make of the, for a long time I would talk to lawyers and investment bankers, and they were all saying, we have no reason to bring any first years in anymore because we can do so much with AI. But now it seems like they're saying we need kids right out of college in here so they can do stuff with AI.
Yeah, it's interesting. I mean, we've seen a little bit of flip-flopping there. I think the story is still negative for entry-level workers. Really, I think for two reasons. One is that they're a more high variance bet. So if there's more uncertainty, then all you can do is kind of optimize for the short term. I know you have young kids, so really, off the beaten path reference in Frozen 2.
Yes.
When the path ahead of you is unclear, all you can do is the next best thing.
So, especially for the kids coming out of college right now, going back to the musical chairs example, there's nobody standing up. There's nobody standing up so that they can sit down. That's what's happening, especially for the people who are entering this job market. It is so much harder for them to find jobs. And if you are one of the ones who are laid off, it is so much harder for you to find a job because there's nobody standing up. Two different economies. Now, if that two-speed market made you feel a step behind, or if it made you feel like, man, what can I do, Antoine? Or, you know what, let me just hang on to my job for a little bit longer and see how this thing fleshes out over the next couple years or the next couple months or whatever it is, right? If that made you feel a certain way, that feeling is information. It's all good. Let me give you somewhere to put that feeling, though. I took everything that we cover on this show, all the data, all the frameworks, and I put it into one free resource, the 2026 Career Protection Playbook. Here is what's inside of it. The first thing that you get in our Career Protection Playbook, your AI automation risk zone. Are you in a building lane or are you in a coordinating lane? The second thing that you get is the 5 skills that actually matter in 2026. Not 50 things, just 5. Third, a 30-day quick start action plan, day by day, so that you don't have to worry about guessing. Fourth, a weekend action plan with 5 specific moves that you can make this Saturday and Sunday. And fifth, the Daily Climbs newsletter, sent to you Monday through Friday at 11:30 a.m. Central. The full recap of everything that we cover on this show, straight into your inbox. So even if you missed a live, you never miss the intelligence. And take this from today and put it to work. When the market gets nervous, it pays for proof. That's what it pays for. It doesn't pay for the hype. It pays for proof. So your move this week is to build proof that you can point to. Show people your work. The professionals who survive 2026, they aren't the ones who's waiting for permission. They are the ones who's building career insurance right now. It is free. Go to nextgenheights.com. Okay. Link is in the description. Type Playbook. We'll make sure that we get it into the chat so that you can get access to it. All right. Let's move on to the second segment of this show today. Now, before I go on, I got to shout out the room real quick. We had some super chats last week. Some members, new members coming in. Dr. Manny, right? Every single one of those super chats, they are here to help support the channel. I don't ask for you guys to send anything at all, but when you do, know that it goes to supporting this channel and helping us improve the content. Okay, I see every single one of you, and I appreciate that. Now let's talk about what really happened on Friday, because this is the most important word on the show today. Repricing. Here's what that means in plain English. For 9 weeks straight, the market has gone up, mostly on AI and computer chip companies. We've been talking about them, all the chip companies that's been going up. Everybody's paying top dollar for anything with AI on it, basically. Then one chip company that we talked about, Broadcom. I did 2 shows on Broadcom last week. They reported their earnings, and they did not raise their AI forecast like people hoped. That was the pin that popped the balloon. Guess what happened after that? Chip stocks fell 10% in a day. Nvidia alone lost over $300 billion. That's what happened to Nvidia, guys. Lost over $300 billion. And it did not stop at our shores either. By Monday morning, it went around the world. Korea's market dropped as much as 8%. Japan's big tech investor, SoftBank, fell 6%. Chip companies in Europe fell too. Insane, huh? I'll show you guys a CNBC article. Check this out. Asia tech stocks. Tech stock sell-off accelerates. SoftBank dropped 6% as investors sour on AI-linked names. All right, let's go to Broadcom. Show you guys a video on this one.
Taking a little bit of a breather after a drop yesterday as well. 30 minutes till the start of the cash trade. I'm Matt Miller.
And I'm Danny Berger. Bloomberg Open Interest starts right now. Than last quarter, and they are gating it this time. Last time around, you'll recall that they gave back all of their money. But a couple important things to note, Matt. It was 10% redemption requests. Compared to Cliffwater, it was something like 17 for them. So much better than feared. So you're seeing the shares rally 1.6%. They emphasize we have ample.
Let's go to Broadcom. Let me speed this up. You're talking about Blackstone. Let's go to Broadcom.
And it's something we're seeing even this morning. There's really broad selling sort of across the semis. And it's something we're seeing even
for a lot of investors needs to come from somewhere else, right? And we see it for sure coming out of Bitcoin. But is it going to come out of more adjacent stocks, more sort of industry adjacent stocks?
I think it's definitely possible. And I mean, and it's something we're seeing even this morning. There's really broad selling sort of across the semi space. Nothing is down quite as much as Broadcom, but people are taking some of the money off the table. And I think especially some of the companies that investors have been going for exposure to things like Anthropic and OpenAI are maybe top of mind.
It's an interesting point on this idea of like adjacent sectors, because for a while, all of the space stocks were rallying really hard on this idea that we'd get a SpaceX IPO. But presumably, the indexes, when they absorb this, it's going to be a lot of industry indexes, right, that like have to put this in. So other things get sold. So how are you and the team thinking about
ETFs,
that?
for example,
Yeah,
right?
yeah, yeah.
If you have a space ETF and they put all of a sudden 15%
and it's market cap weighted,
then Rocket Labs is...
Yeah. Virgin Rockets, whatever. So is the team really looking at that, kind of like what specific industries might come under fire?
100%. I mean, you have to. These are huge IPOs, and they have a lot of enthusiasm and demand around them. People have been waiting for these for a few years, and now at this point, so indexing is going to be really interesting. I'm definitely thinking a lot about, if SpaceX is added to Nasdaq 100 or, some of these bigger indexes very quickly, how is that going to change some of the volatility that we see in first-year IPOs?
It's an interesting thought, right? Because if you are an investor or you're somebody who watches the markets and you start to see that, hey, you know what? I am heavily weighted into this, let's just say the S&P 5, S&P 1, whatever it is that you're investing in, and it's heavily weighted towards like AI companies. And all of a sudden you see the Broadcom situation and impact, the rest of the world, right? You start to say, how much should I be investing, or how much should I ensure that I am diverse? So I want you guys just to think about that as well, too. Inside of your investment portfolios, I know this is about careers, but also this plays into the investment game as well, too. Inside of your investment portfolios, as you are continuing to use AI, think about there being some diversification as well. You have to, because the impact could be very, very big once you start to see market sell-offs like we just saw. Now, here's a part for you guys. Let's take it back to the career piece of it, okay? There's a man that they call the Dean of Valuation. His name is Ashwath Damodaran, okay? He teaches at New York University. And his whole job is figuring out what things are really worth. So he looked at the biggest hype story out there, which is what they're talking about here, the SpaceX IPO that's supposed to be going public this week. Whole bunch of money is going towards SpaceX IPO. They're concerned about if they're, is going to be added to the NASDAQ 100 and all this other stuff, right? Because it's the biggest IPO that we've pretty much seen. It wants to go public this week, worth $1.75 trillion. And Ashwath said this. This is what he said. He said it plain. He thinks it is worth closer to 1.3 trillion. He said it is too richly priced for his taste. That's what he said. Okay? Too richly priced for his taste. Now, why did he say that? I'm going to show you guys the article here on CNBC of him saying that. Let me pop this open real quick, and you guys can go out there and read it. But this is him in here talking about too richly priced. I'll go to the video.
A big question, maybe the biggest question, is whether the expected $1.8 trillion valuation is justified. For more on that, we welcome in NYU Stern School Professor of Finance, Ashwath Damodaran, the so-called Dean of Valuation. It's nice to have you back. I mean, if you can't answer the question, who can? Is the value legit? What do you think?
I mean, I think the question you got to ask is, the pricing of 1.8 trillion justified? And the answer is absolutely, because as a private company, it was already priced at 1.2 trillion a few months ago. You could have called this 1.8 trillion then. From a valuation perspective, though, you got to ask questions about the businesses. And there are two great businesses SpaceX has: its space launch business and the connectivity business. Great in terms of unit economics and in terms of their competitive advantages. But the wild card here is the AI business. I mean, it is a business with the most potential, but the worst unit economics, the most competition, the most capital expenditure. So in many ways, I think an investment in SpaceX is just a loaded bet on AI and Elon Musk. And if you are okay with that, then go with the 1.8 trillion. If you're not, then you're in trouble.
I want you guys to read that as a market signal. Okay. 1.8 trillion. He's saying 1.3. He's saying a lot of people are saying the 1.8 trillion because they believe in Elon Musk. I don't doubt Elon Musk at all, personally. But he is not saying that the company is bad. He's basically saying the price got ahead of the proof. And that is the lesson for your career, too. Hype is a story about what might happen. Proof is the thing that you already did. Okay, so there's a bunch of hype into SpaceX at this point in time. But, they did a lot, and they have done a lot, and they're doing a lot. But they are really betting on the hype of the AI business, which doesn't have the unit economics at this point in time. Think about that for your career. Prove is the thing that you already did. When things get shaky, the market pays for proof every single time. So stop selling people your potential and start showing them your receipts. Type proof in the chat if you understand. It's about selling the receipts. Show the receipts. This is the reason why we have our Saturday morning calls, because it's the opportunity for you to show the receipts. You have so much people who have bought into, I got this degree. But you know what degrees don't do? Degrees are really proof that you can go and do something for about 4 years, but it doesn't really show the work and the value that you add. Now people want to see it. People want to see what you built. People want to see what's online. People want to see who you impacted. And that's the day and age that we live in right now, for getting a job, for doing anything. It's about the proof. Now, let me say something that is going to land pretty hard right now. The reason most of y'all have not made your move to show the proof is not because of motivation. It's not because of the confidence that you have. It's not even your work ethic. You do not need more motivation. You basically need a target. Because in a market that pays for proof, you cannot aim at everything. The person who aims at everything gets nothing. You basically need a target and a plan to hit it. That is the reason why I built the Career Clarity Audit. You fill out one form. I personally review your background. And in 24 hours, you get a Google Docs and a PDF back. No calls, no back and forth between me and you or anything like that. The full package. It's a tier 2 package. It is the audit plus the exit plan. It is $497. You get your target roles, your positioning statement, your job search strategy, and a 7-day action plan. And copy and paste outreach messages. A full LinkedIn about section rewrite and 8 to 12 resume bullet rewrites. And a 90-day strategic exit plan that protects your income while you make your move. Just imagine having a target, right? You know how the situation is right now with the musical chairs in the job market. The reason why people don't end up in those chairs when somebody does stand up is because they don't have a target. They're shooting for everything. Blindly sending out applications, 500 applications in 2 weeks. That's not having a target. You need a target. And this is the reason why I built the Career Clarity Plan, the Career Clarity Audit. Okay. In tier 1, you get your target roles, the positioning statement, the strategy, and a 7-day plan in your messages. It is $197. Okay. A member of our community, her name is Toria. She went through the Career Clarity and the exit plan because she wanted to figure out what she wanted to do in her career. She's an IT business systems lead. After we locked her target, she landed a 30% raise, a 100% remote job. And she was the only person that they interviewed. The only one. That is what a target does. And here's one more. Because I most recently increased the price. A member named Doris got the audit in the exit plan and said, Antoine, this thing is worth over $500. So guess what I did? I said, if it's worth over $500 to you and you're getting you a 30% raise, I'm increasing the price. And that's what we did. Tier 2 is $497. Tier 1 is $197. And I stand behind it 100%, because if within 48 hours, you cannot say that I know exactly what role to target and what to do this week, I give you your money back plus $50 for wasting your time. Stop applying to random jobs. Get a target. Go to nextionheights.com/career-clarity-audit. Okay. Link is in the description. Let's move on to the next segment over here. What are we going to be talking about next? I came across a good article that I wanted to share with you guys. We talked about the market just being repriced because of hype. Now let me show you what it can never reprice. The market cannot ever reprice you. There's a man named Kelsey Hightower. He's been all over YouTube and all over Business Insider over the last week. He's been doing a good job of marketing himself and showing the proof. He was a distinguished engineer at Google. That is about as high as it goes in tech. He retired and now he coaches young people on careers. You guys have seen Kelsey Hightower on YouTube channels. Fit young man. This is him right here. Former Google distinguished engineer says AI isn't replacing software engineers, just ones who only know how to code. That's Kelsey. Okay. I want to share a video with you guys as well, too. See if I can get up here. Let's talk about this.
In China just a few months ago, a great conversation about AI, and obviously you have a lot of thoughts on it as well. Is AI going to be the great job destroyer that many people in the banking industry are talking about, hedging their comments and maybe not communicating as well to the rank and file?
So Dron Asmogler and I work on this a lot. We have a research center together at MIT. We've written a book, Power and Progress, on this issue. And I think there's a danger that AI, in its automating form, in the form that displaces workers, will predominate. Whereas what we're arguing for is using AI to strengthen human expertise, to increase the demand for human expertise, and to allow you to expand into new areas, because that will actually strengthen employment.
You said many good jobs, though, are going to be lost. You say it's looking increasingly dark. How do we stay away from that worst case scenario when, I guess, the complaint is that the larger companies are going to be able to get richer because of it, and the workers going to be left behind?
Well, this is exactly where we are right now, which is the automation part of AI is moving ahead pretty much at full steam. And the new job creation part, the part that creates new tasks, the part that expands what your company can do, is being somewhat neglected. Now, we think that's mostly about corporate executive decisions. It's easy to replace people. It requires more work to think about the new frontiers. But you need to think about the new frontiers. And there's tremendous value to be had there. There's a lot of profit to be had if you can bring the latest ideas out of universities, commercialize them, turn that into manufacturing. And Hong Kong and China have got a great opportunity to do this, but so does the US.
Yeah.
So let's go back to Kelsey Hightower, because there's so many theses that's out here about job displacement and AI. Well, Kelsey gives 3 tips that I want to share with you all, okay, regarding AI and displacements. Tip number 1 that he gives, he says grades and a diploma are not enough anymore. He said that you have to show your work in public. Real things that you have built that people can point to. That's what he said. What do you think I'm actually asking you guys to go out there and create content for? Because content is you showing what you've built. Even if it's just you talking about something that you have a passion about. It's something that you've built. You've taken the time to put your thoughts together and you've put it out there into the public. That is something that you've built. Tip 2, he says invest in real relationships. He said the network really matters. Being in the same room as people doing the work beats doing it all online. Another thing that's very important for me, which is the reason why I have a Patreon community, because it is an opportunity for you to invest in yourself and to invest in real relationships. Our Patreon community is growing at a extreme pace at this point in time because of those real relationships, because of people who are flying into New York, meeting other members in the community, networking with real people, being in the same room as real people doing the work beats doing it all yourself. This is the reason. Kelsey's giving you guys that same tips right now that I've been giving you guys for a while. And tip number 3 is the one that stopped me. He said, do not become a senior engineer in a junior human. And this is for my builders in the community as well, because we've been talking about this for a long time as well. What is a senior engineer and a junior human? A senior engineer is basically somebody who goes out there and just builds in the dark. Builds in the dark and doesn't have any sort of human connection. Some folks get really good at the technical task, but they let the human part go quiet. The creativity, the empathy, the vision, the judgment. And he said those are the only things that AI cannot do because the machine has no experience and it has no empathy for the human condition. So he leaves you with one question. And I want you guys to write this down. I actually do want you guys to write this one down. Even though I have a newsletter, I'm going to be sending it to you. Write this one down. What can I bring to the table that this AI model cannot? And for many of you guys who's part of the Patreon, I give it like brother Andre Oliver. Andre Oliver is a relationship builder. He's an introducer. He's one of those people that just connect people. All right? That's what he is. What do you bring to the table that AI cannot? So let me give you guys the other side of this as well. Because it's not all doom when it comes down to AI displacement and none of this stuff like that. It's not all doom, guys. And there's some people who are really going to look at it and not see the opportunity. We are optimists over here in this community. So if you are one of those people who are not an optimist, maybe you need to be around people who are optimists and join the community. Years ago, a Google computer beat the best Go players in the world. Everybody thought that was the end for human players, okay? But Sergey Brin said the opposite happened. The human players who lost to the machine, they studied it and they got better, a lot better. The machine pushed the humans higher. That is the move for you guys as well, too. Do not race the machine. Learn from it and let it push you up. And listen, this is already happening in real jobs today. Business Insider talked to 6 tech workers about AI, and this is what they had to say. Okay? This is what they had to say. Look at this article right here. AI is reducing hours of work to minutes. Some employees say they're just as busy. A head of product at Amazon named Audit. That's her name, Audit? He said AI gets him to the starting line faster. But getting from 80% to 100%, that is still where the real work lives. The judgment, the trade-offs, the years of context. So here's a test that you can run this weekend. Look at your daily task, guys. Could you write the instructions and AI can follow? An agent can follow to do 80% of the work that you're doing? If the answer is yes, that 80% is already moving. There's somebody that's automating it right now. I think about like myself, the team. I have 4 agents, right? I have agents that's even lives in the community Discord, answering questions, looking at running on cron job. Somebody types something in there and it goes about 24 hours without it being touched. Jordan responds to it. That was once a job of a human. There's not a need for certain tasks to be done by humans anymore. Think about that. Think about like thumbnail creators. You don't have to hire thumbnail creators at all anymore. Eventually, there's not going to be a need for video editors. Now, I say this, for standard type video editing, yes, something that looks polished, there's not going to be a need for video editors. But for the real creativity, there's going to be a need for video editors because they can add their own flavor to it, their own style to it. But people who do not want to get good at video editing, they're going to be cut. And just imagine how much that costs for a lot of people who are especially in the content creation space. The majority of jobs that I'm seeing leaving right now, is things related to the content space. But this is going to translate over to the corporate world as well. Content, marketing, all that sort of stuff those are going to be the jobs that's being automated the fastest. And I'm seeing it right now happen in the small business world because I'm living in that space right now myself with this show. So your real job is really the other 20%, the judgment, the trust, the building. So learn the tool for the 80% and get great at the 20%. I want you guys to type human in the chat if you're going to sharpen the part that the machine cannot do. Focus on the part that the machine can't do. Now, quick thing. I told you guys to, take notes a second ago, but you don't have to take notes on the entire show. Put the pen down now. Just watch. Because everything that we cover on this show, the numbers, the names, the lessons, I write it all up and I send it to you. The Daily Climb newsletter. Monday through Friday, it goes out at 11:30 a.m. Central. It is free. It lands in your inbox, the full recap of everything that we cover on this show so that you can be present and have a conversation in the chat and build the real community with real humans. Have a conversation. Link is in the description, nextionheights.com, okay? Now let me show you what a one-person team really looks like. I'll show you what a one-person team really looks like, guys, because, I was on a call last night. One of my good brothers on my leadership call that I have on a Sunday. He's like, I'm trying to think if I should hire a new team or a new person for my team. Talking about hiring his wife. He's one of my other brothers. Mitch, he hired his wife into his organization, his business. And, that's a good thing. I wouldn't do it. I love my wife, Teresa, but I'm not hiring her into the business. We tried that before. It just doesn't work. Okay? But you can build a team without bringing people in. You can build a team without bringing real people in. I'm doing it right now with 4 different agents. So the lane is wide open. Being the person who builds is the lane. That's what it is. Being the person who builds is the lane. We're going to talk about regular people pointing AI at problems that they understand. Business Insider told a story of a woman named Whitney Steckoff. Here's the story right here, okay? Let me put this on the screen for you guys so you guys can see it. This is the story right here in Business Insider. This Ford exec used Claude to build her family a chief of staff to keep up with daily to-dos. She was carrying the whole mental load at home. Birthday parties, sporting events, school emails, babysitter schedules, all of it. So she built an AI assistant. She named it Claudette. Claudette. It scans the family calendar and email. And every morning it sends a briefing on the whole day. She built it on a $17 a month plan. And listen to what she said. She said it was the most important thing to improve her marriage. She said, I do not feel resentful now carrying all those mental tasks. That's what she said. That is the whole point, guys. She did not write code line by line. She described the problem in plain English, and the machine built the fix. What do they call that now? They call it vibe coding. So stop thinking about AI like it's a competitor. Think about it like it's a exosuit. It does the heavy lifting. You bring the judgment. You do not race the machine. You basically wear it. Let me get personal with you guys for a quick minute, because I'm not going to ask you to build something that I'm not building myself. I'm building the show. I built the show this morning. Spent 2.5 hours building this show this morning. Trying to get the stories that I wanted to put together, looking at Business Insider, putting my human judgment to it. That's me building right there. Some of y'all know that I've been building a tool called Ground Truth. Here's the problem that it solves. Cities have to keep their roads safe. Potholes. You guys ride around these cities, have all kind of potholes, cracks, worn out pavement. Right now, most cities pay a company a lot of money to drive around and check the roads once every few years. And the day that they finish it, the data is already getting old. It's already getting old. As soon as they finish that. So what I did was I built a tool called Ground Truth. You put a dash cam in your car. You drive the roads, and the AI reads the pavement and scores it for the city. Fast and way cheaper. But here's the part I want you guys to hear. Building the tool was not the hard part. The hard part was putting it in front of real people. That was the hardest part. I'm going to tell you like that. The hardest part was putting it in front of real people. So what did I do? I built an AI agent to do the outreach for me. It found the public's work director for a city that's near me. It booked me a real meeting. And when that meeting got booked, I told you guys in the Patreon, I got scared. Like, God dang, this is true. This can happen. Started shaking. I sent it out to everybody in the Patreon group like, this really did happen. Because at this point in time, when you get a meeting, you know it's real. Set up a demo, did the demo. Went to meet him for lunch to do a pilot. We did the pilot. Pilot on a stretch of road that he wanted me to sample. I sent them a report back. Didn't hear back for a bit. Week and a half, I followed up. Last week they came back. We won it. We are working the paper now. It is not signed yet, so I'm not going to overstate it. But that is a real city that is saying yes to a thing that I built. So here's a lesson from my own story. You can build all day. You can build all day. This is what we talked about in the Career Accelerator 90 as well. But if it sits in a folder, if it sits in a closet, it is not a business. The transaction is the part that scares you. It is the part that matters. The transaction is the part that scares you, and it is the part that matters. So build it, then put it in front of people whose problem that it solves. Type build in the chat if you have something sitting in a folder that needs to get in front of people. Type build in the chat. Many of you have something that's sitting in folders that it needs to get in front of people, and you just don't know how. If you're part of the Patreon, you need to be signing up for the CA90 next. August the 22nd is the next cohort. We already have 6 founding members already signed up. You got Jamie, you got David Hill, you got Andre Oliver, you got Melanie, and I'm forgetting a few others. But you better be part of it because it's only a small group. And it's a maximum of 12 people who are going to be building right alongside you. Build. Now, here's where the real builds happens. It happens in the Patreon, the Heights Inner Circle. Every Saturday at 7 a.m. Central, people bring real work and build in front of each other. We share the wins. We share the mess ups. We point AI at real problems together. It is $9.99 a month. Go to patreon.com/Black Heights. Link is in the description. Now, let me show you what that room built this weekend. Okay, just this week. We had all kinds of builders this past week. All kinds of builds. Okay. The community is full of builders. Let me show you 4 of them real quick. All right. First, a member named Melanie. She works a federal job. And she did her own market research, found that Americans hold over $120 billion in health spending accounts, and a lot of it gets wasted every single year. So she built a platform that helps dentists accept that money. A storefront up front. A dashboard on the back. She sent it to a real doctor who tested it and said it was great for a dental office. And now her own job is pulling her onto an AI team because she became the expert. Next, a member named Benjamin, veteran. He went full builder mode this week. Put on the CTO hat. He built a simulation with 30 aircrafts moving around the live map. We got a chance to see it. I'm like, God dang, this looks like a video game. Genius. And he is not just using AI. He is training his own models now. He even started a fun side project, a series of kids' books on Greek methodology or mythology. I said methodology, mythology. That's what you call builder energy right there. And it does not stay in one lane. We got next a brother named Derek. He in here. His company keeps a leaderboard on who is using AI. A few weeks ago, his name was not even on the list. Not even on the leaderboard. This week, he built AI agents for his job and he climbed to 71. That is the move in a market that pays for proof. When the company is watching who use AI, you put your name on a board. And one more. Remember name Andre. Y'all know Andre, Custody Atlas. AI powered guidance for parents going through custody. That is custodyatlas.com. Go look at it. Go look at what he built. It's live. Got Jim. He changed the name of his app, Alley, to Food Maps, Method Maps. None of these people waited for permission. They saw a problem. They built the fix and they showed the work. That is the whole game. Type room in the chat if you're going to be joining a group where the people build like this. Type it in the chat. And look, I can talk about building all day, but the real builds, the real breakdowns, they live inside the Patreon. Melanie did it. Benjamin did it. Derek did it. Jim did it. Antoine did it. Andre did it. Cam did it. Cam even showed a book that he just built. He built the book. Every one of them started by showing something unfinished in the room. That is the whole move. You do not wait for it to be perfect. You build. The Patreon is $9.99 a month. Patreon.com/Black Heights. Okay. You can keep reading all these stories, right? Go back to this Ford exec. Saved her marriage by building herself Claudette. She said, man, doing too much work around this house being an executive. Managing these kids, managing these birthday parties. I need some help. So she built Claudette. That is the game. That is the game, guys. The game is to have these agents. And the game also at this point in time is to have and build Claudettes for people. That's what it is. See, Denzel, look at Denzel right here. Look at Nadia. Nadia says, morning, Antoine. Scheduled 7 a.m. update. Overnight, no meaningful activity log beyond your instructions. Inbox status, I do not have a current inbox feed checked. Today's plan, continue ground truth AI outbound prep. Focus on municipal targets, public work context. Marcus gave me a revenue snapshot. Told me to follow up with Walters, Lambert, Danny. All right. Jordan says community health was good. He followed up with somebody in the chat this morning. This is the opportunity that's out there, guys. Building agents for people to relieve and save marriages. Guess what Antoine's going to be doing next? Antoine's going to have a little part of Next Gen Heights to help you guys build your agents. That's what it's going to be. Okay. We're going to make sure that Next Gen Heights gets it on his website to build the agents, guys, because it is where people can get the help that they need. It's saving marriages. That's the opportunity. Learn to build these agents. Learn to build these agents, whether it's for a business in the B2B space or B2C space or per personal for your mom. If I built my mom an agent right now to take care of some of the tasks that she has to do for work, she'll pay me a couple $100 for it. Now, my mom will want it for free, and I'll do it for her for free too. Oh, man. Let's get to the executive summary. Having a good time on the show today. Let's bring it all home. 3 things that I want you guys to take away from today's show. 1, the jobs number came in hot. 172,000. We were celebrating. Jobs. Strong. Very strong jobs report. Brutal. If you are out of the job game, meaning if you get laid off, or you are somebody who just graduated, or you are trying to get into this market, it is a brutal job market. But if you have a job, you got a seat. You're doing pretty darn well. But if you have a job, also make yourself impossible to cut. 2, Wall Street repriced the hype. $1.8 trillion gone in a day. The market stopped paying for stories. They don't care about the stories anymore. They want to see proof. What have you built? It's starting to pay for the actual proof. No more of this hype. 3, the machine cannot touch your judgment. Hightower said it. Brin showed it. The builders in our room lived it. Learn the tool, pointed at what problem that it can solve, and then show proof. And underneath all 3 is the same lesson. When the market gets nervous, hype gets overpriced. Or hype gets repriced, excuse me. The hype gets repriced, but proof gets paid. So go out there and build proof. And one big thing that is coming this week, SpaceX starts trading on the public market on Friday, June the 12th, under the space ticker SPCX, the biggest first day in history. And remember what the Dean of Valuation told us this morning. Even the biggest names gets measured against their proof. Here's the picture that I want you guys to hold on to. Think of the whole economy like a giant ship. I used this analogy last week. A cargo ship. And all of the cargo is sliding to one side because a wave hit it, went over to the side. If you are standing on the wrong side, it feels frozen. Feels like you're stuck. Feels like there's no hope. There's no openings. But if you look across that deck, you see companies worth trillions of dollars. You see companies funding rockets to go into space. There's money. There is money. The money did not leave. It just slid to the other side. And it slid to the side of the people that build. Your job is to get to that side. Mark your calendars, guys. SpaceX goes public on the 12th. We're going to talk about it on Friday morning. We're also going to bring you guys the climb seat. I have to get a member of the climb seat this week. I'm traveling this week too, guys. So on Wednesday and Thursday, I'm going to have replays playing. Just give you guys a heads up right now. I'm traveling this week. On Wednesday and Thursday, we will have some of the best of the Daily Climb shows. It will be airing on the same time like we normally air it, but they will not be true live shows with me doing the show. Okay, I'll be out of the studio for a couple of days because I need to talk to some customers. Last 2 things. 1, if today hit home and you know you got skills, but you do not have a target, go and get the career clarity audit. Get the tier 2, the audit plus the exit, $497. Okay, you get it back within 24 hours, no calls, and then there's a money back guarantee. All right, and 2, hit the like button before you leave the show today. Subscribe to the Daily Climb if you have not yet. Share this with one person who needs the proof. Okay, not the hype. Share it with somebody this week. This is the Daily Climb. I'm Antoine Wade. I appreciate each and every one of you guys. Remember, the market is neutral. It rewards leverage. It rewards proof. And it rewards the people who build. Information is power. Strategy beats luck. Skills beat degrees. And action beats hope. Keep climbing, guys. This is the Daily Climb. I'll see you guys at the top. Okay? I will see you guys at the top. What you guys think of today's show, man? Let me go and see the chats real quick. I haven't had a chance to check out the chats and see if I need to respond to anything. Go here. Go here. Let's get that out of here. I'm going to see Big Suggs this week. That's who I'm going to see. Big Suggs and I are going to get a chance to see each other in DC. That's where I'm going to be, guys. Appreciate it, Cam. Cam said, excellent show. Big shout out to Ben, Melanie, Jim, Derek, Antoine, Con, Cam, Andre. I appreciate it, man. Brother Jabron. Hey, he's another builder, too. I'm going to tell you like this. Jabron be quiet about his build, but Jabron be building. CEO right there. Good to see you guys. I appreciate each and every one of you. We will see you guys on tomorrow. I will be live on tomorrow, but Wednesday and Thursday, I will not. Guys, going to have a good Monday. Crush it. And we will talk to you guys soon, okay?